Hey there, it's Waylon Corco, your friendly mortgage loan officer. Just wanted to record another video here for you today just to help educate consumers. One thing I'm seeing a lot of recently is people wanting to purchase an investment property. There's a ton of opportunity out there with that. Some people are looking at short-term rentals like an Airbnb or a VRBO or something like that. So those are great options to be able to create more cash flow. The other thing is a long-term rental. So with rent prices going up, obviously home prices are going up as well. So people that are in the position to be able to buy an investment property, they see the opportunity to gain on the appreciation of that home, but also have somebody else pay down that mortgage. So it can be a win-win for renters because maybe they're not in a position to buy a home right now, and they can get a house and pay the rent, and then as the owner of the property, you can benefit by having somebody else pay that down. So a couple things that I want to kind of talk about. First thing is a typical requirement for an investment property with most loan programs is going to be around 20% down. So if you do a property that is a 1 to 4 unit, generally, if you go over like 2 to 4, there's more down payment requirement. But from a residential standpoint, generally a long-term loan can be associated with a 1 to 4 unit property. So there's some different intricacies to that. So certainly reach out and we can talk about your individual situation. But generally looking at least 20% down. The reason that people are wanting to get into an investment property is one, for a cash flow. Maybe you can generate some income there. What I'm seeing though is in most cases the wealth that's created from an investment property is the ability to gain equity. So on one hand, you have the property appreciating. And so I do think it's good to reach out to a local realtor in your market to figure out what typical appreciation is on an annual basis. Last couple of years have been a little out of the norm, so I wouldn't expect that on an annual basis. But prior to that, what were you seeing? Was it 2%, 3%, 4%, 5%, and so forth? And you can kind of use that to project what that looks like. And I always kind of a Excel nerd. I like to kind of mess around with spreadsheets and things like that. So you can look at what you're purchasing that home at today, and you can kind of annualize it out. Let's say you want to keep that property for 5 or 7 years. You could basically buy that property and see, let's just say it's a 4% appreciation. You could see that gain every year just on the appreciation side of it. So even if the property broke even, you're still going to see some money that's created over those 5 years from the appreciation of the home. But the other part of it is if you can see what that principal pay or the principal loan amount looks like 5 years down the road, you can see you're kind of hitting it from both sides. You're seeing the appreciation, but then you also have the mortgage being paid down as well. So there's a ton of opportunity, I think, with real estate. If you have any questions specific to your situation, I would love to answer any questions you may have. I do believe that there can be some major wealth created through real estate, and it's a great opportunity. So if you need anything, feel free to call or text. My phone number is 605 360 6966. Thanks and have a great day.